Hello, very good morning to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Very good morning. Today will be Wednesday, the 16th of April 2025. And it's going to be very interesting daily movement on the markets, which I will cover later. But without further ado, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so give me a minute, let me adjust my screen. So as usual, before we jump straight into the gist of the daily dose of market insights, which is our intraday technical outlook on the major dollar pair, the major stock indices, and the two key commodities market, gold XAU and as well as West Texas crude oil. Let's have a recap what has taken shape in terms of news flow, economic data release that was yesterday and in early today's session. So let us start with the news flow first. So the news flow right now will be more pertaining to trade tariffs sensitive news flow, which has a significant impact on the market movement, especially the major US stock indices over here. So let's take a look at yesterday's news flow, which is rather, I would say, negative in relation to the trade tariffs. All right. So we know that right now there's this couple of friendly US nation is actually in US or heading towards Washington this week and next week to negotiate that 90-day temporary pause on the higher reciprocal rates. So based on yesterday's latest development between European Union trade officials and US officials, the Bloomberg report highlights that there's little progress being made between EU and US as US trade tariffs is expected to stay. That means, i.e., there is going to be a potential higher rate of tariffs that's going to hit on EU products heading into US, and as well as another news flow stating that China has yesterday ordered their local airlines to actually not to actually order Boeing's aircraft and Boeing's air parts over here. That means China actually orders a Boeing jet delivery halt as trade war escalate or expand. So that means, i.e., there could be more potential trade tariffs, indirect tick for tat measures coming into play between US and China. So because of this two negative news flow, the movement of the US stock market was rather lackluster again for the second consecutive session since Monday. So it opened at the high. So usually this pattern has really started on Monday, also took shape on yesterday as well, where the US stock indices during the first hour of the US session yesterday, that means i.e. at the start of 9:30 p.m. Singapore time yesterday, Tuesday, gap up, open, but after that they can't maintain the momentum and close near the session low. So overall, what I could see is that the SPX is down by negative 0.2%. The Nasdaq is down by it's up marginally, but it did a bearish reversal. If you look at the Nasdaq 100 performance, also same thing, bearish reversal, gap up. Then after that, can't maintain the momentum and close near the session low. All right. So not that fantastic at all, based on, if you look at the whole intraday movement of yesterday's US session yesterday, a positive with a minor positive gain of 0.18%. The Dow Jones is down by negative, like the Nasdaq 100, up by marginally by only 0.11%. So this despite the fact that yesterday we do have rosy earnings coming out from Bank of America and Citigroup that managed to beat expectation. So Bank of America up earnings per share for Q1 0.9% above consensus of 0.83 and above the previous quarter of, I mean, year on year from last year is 0.83%, 0.83 earnings per share. Similar for Citigroup as well, 1.96 earnings per share, managed to beat expectation of 1.89% and surpass the previous so-called quarterly results of a year ago. which is 1.58 EPS. So market participants now are more concerned about macro data that is impacting the general economy rather than firm-based specific earnings announcement right now. So despite the fact that Bank of America and Citigroup managed to beat expectation, but overall the major benchmark stock indices was rather lackluster. All right, and if you look at the price action of the SPX, this is what you could see over here based on candlestick. There's this second day of bearish reversal candlestick, hanging man, followed by a shooting star right below the 20-day moving average. And the one that is much more obvious is the Nasdaq 100 over here, shaping a doji star over here. If you combine these two candlesticks, it's a bearish harami right after a second retest of its 20-day moving average, I think as an intermediate resistance, tested the second time on Monday. Previously, there's this strong bullish candle, which is triggered on last Wednesday after that news flow where Trump gave that 90-day temporary pause on the higher reciprocal rates. But in the last few days, that is not able to have a positive follow through and shape this bearish reaction. And what's interesting over here is that as we are speaking right now, the Nasdaq futures, okay, the E-mini futures, which is trading right now as we are speaking, during Asia session, is down by negative 1.4% on the Nasdaq 100 futures, and it starts to gap down in today's Asia session. Why this gap down takes shape? Because right after the close of today's Asia session, right after the close of yesterday's US session, pardon me, there was also another negative trade tariffs related news flow where the White House actually ordered NVIDIA now to actually curb or restrict, or I would say ban their lower tier H20 semiconductor chip export to China. So this is more likely another tick for tat measures as well, where coincidentally, initially at the start of the US session, there's this news flow that China orders Boeing jet to halt. That means China actually order their local airlines not to order Boeing jets and Boeing parts. And right after that close of the US session yesterday, now US White House ordered NVIDIA not to actually or restrict their lower tier H20 chip export to China. So that doesn't actually gel well for the Nasdaq 100. And that also causes a negative feedback loop into the rest of other major Asia benchmark stock indices as well, where the Nikkei 225 is down by negative 0.73%. So the Nikkei 225 yesterday we flipped to a bearish bias for those who followed my daily dose on a daily basis, because earlier there's a signs of exhaustion already. And for Hang Seng Index, is down by negative 2%. So later I'll cover the technical outlook on the Hong Kong 33 representing the Hang Seng Index over here. So the thing over here is that, like I mentioned now, macro data or micro related news flow is overtaking as a very particularly related to the ongoing trade war that US unleashed to the rest of the world has a higher impact right now over other data, even firm-based specific data, and as well as country-related macro data. So why do I say that? So despite the fact that China data today, key China data that was released earlier today, actually came in better than expected. All right, so let me share with you what do I mean by that. Okay, so this is China data that was released about 1 hour ago. So the housing price index, actually the decline slowed down. Previously it was negative 4.8%, and for the month of March it slowed down to negative 4.5%. And if you look at the trend of the Chinese housing price index, which is very important, why? Because close to about more than 50% of the Chinese wealth is being tied up in the China property market. And we know that in the last 2 years, China property market is the doldrums and is the main crux that create this ongoing deflationary risk spiral in the Chinese economy. So what we could see over here is that the newly built house price year-on-year change in the 60s. 70 cities in China fell by 4.5% year-on-year, easing slightly. So if you look at the 5-year trend, it seems that since October last year, low of negative 5.9% year-on-year, this we call it a plunge in terms of magnitude has starts to slow down every month as the data, new data gets flashed in over here. So this month it actually slowed down further to negative, the rate of slowdown actually is further, pardon me, to negative 4.5% from negative 4.8% year-on-year in the previous month of February. So this is indicating that there is some signs of stabilization in the Chinese housing market, and also Q1 GDP rate managed to beat expectations slightly by 3 basis points 5.4%. Market is expecting 5.1%. And industrial production rose stunningly to 7.7% year on year, above market expectation of 5.6%. And even the retail sales also managed to kick up higher at 5.9%, above 4.2% year on year that market was expecting. So what you could see, this set of rosy China data is indicating that previous fiscal stimulus measure is slowly seeping into the real Chinese economy and is perhaps working positively for the China retail sales or mainland consumer behavior has starts to pick up steam. All right, but however, because of the overriding arc of this macro related data pertaining to trade tariffs, that has a higher influence over Chinese data right now, and because of this, the Hong Kong Hang Seng indices do not manage to stage any positive rally at this juncture. All right, so later I'll share with you the intraday technical outlook on the broad-based we call it intraday technical outlook on the broad-based major stock indices. We also covered the Hong Kong 33, represent the Hang Seng Index on a daily basis. And because of this fear about macro, the fear about trade tariffs war impacting a risk-off environment right now globally in the major stock indices, driven the fact that the Nasdaq 100 have fallen by more than 1%, that has a positive feedback loop into safe haven related instrument like gold. So gold, as we are speaking right now, XAU slash USD, as we are speaking right now, managed to surge to another fresh all-time high today. All right, at in today's Asia session, it added on a further gain of, as we are speaking right now, 1.32%, and print a fresh intraday all-time high at 3,275 so far, and now it's down slightly to 3,071 from the current intraday all-time high print of 3,275. So later I'll touch on more about the intraday technical on gold, where still recall on Monday, gold reacted right exactly our short-term pivotal support level, smack on, and continue to stage this impulsive up move. So what are the key levels to watch out now for gold? Do stay tuned when I cover the short-term intraday technical outlook on gold. All right, so for the dollar, is rather mixed over here. So if you look at the dollar over here, it starts in a 5-day rolling performance, it starts to go sideways on the dollar. So the dollar yesterday managed to gain slightly. So if you look at the dollar index yesterday, it managed to stage a slight gain of 0.5%, but in today's Asia session, it actually has a negative follow through. All right, with down by negative 0.3%. And if you look at yesterday's push up, it's more likely related to the hourly RSI in the oversold region, but the daily RSI, pardon me, the daily RSI hit the oversold region, but the daily RSI on the dollar index is not shaping a bullish divergence. In fact, it's going to shape lower low in the price, similar with the price action of the the raw price action of the US dollar index on a daily basis. So indicating that the impulsive down move may resume as well. And do not forget over here is that if we were to look at from a perspective, okay, let me share with you guys the, all right, so this 5-day, if you go down to the 1-day rolling performance, yesterday we do see the ongoing so-called weakness on the dollar against the yen, against the euro, and against the Swiss franc. So especially against the yen and the Swiss franc is also due to this safe haven, this is a 1-day report, safe haven status as well over here. All right, so later I'll touch on more on the intraday technical outlook on the US dollar. So I want to mention that despite the fact that the dollar index managed to stage a bounce yesterday of 0.5%, but based on the 5-day rolling performance and the 1-day rolling performance of the movement of the dollar against the major currency, and just now the technical chart of the dollar index that I shared with you guys, yesterday bounce is more related to a previous oversold condition rather than the start of a medium-term bullish reversal in the US dollar strength. All right, so let's share with you. So later, very interesting, I will share that also the Aussie dollar, still recall that Aussie dollar yesterday we were bullish, and now the Aussie dollar is now seems to be giving a bit of the dollars is now coming back into the Aussie dollar. So the dollar Aussie cross rate now has starts to inch slightly higher as we are speaking. Okay, because the Aussie dollar, in the hourly chart, later I'll share with you, it start to flash out certain bearish momentum condition right below the 64 level momentum, 64 key medium-term pivotal resistance on Aussie dollar. So I'll touch on more about that later. So, and also another news flow more pertaining to the oil price over here. So oil price yesterday actually show a lackluster performance. So oil was actually down negative 0.4%. So you look at oil price over here. Let me very quickly touch on oil. So oil yesterday is down by negative 0.2%. So ever since the strong rally that was seen of a 7.7% on 9th of April, the last few days of session of price action in the 1, 2, 3, 4, 5 is rather lackluster. And still recall that yesterday we do have a bullish bias, but we warned that this bullish bias is only a minor counter trend rebound phase within a medium-term downtrend that is still unfolding in the West Texas oil. And yesterday, lackluster price action in the WTI crude oil price has been reinforced by this negative news flow, where IEA, which is the International Energy Agency, has slashed its forecast for oil demand this year and as well as next year, and he expects that the oil market, there will be a what you call it, a supply glut. That means more supply than demand, that it may persist through 2026. So that is a rather bearish price forecast out by IEA, not even this year, and potentially stretching into next year as well. All right, so with that, that is the first session of today's news, today's market insight, daily dose of market insights. Now let us cover the second session, which is the intraday technical outlook. All right, so with that, let me expand my screen so that you guys could have a better view of the charts. All right, so now let us start with the FX market. All right, over here, starting with the euro dollar. So no change on the euro dollar as it's going to trade sideways. So it seems to me that this movement, this sideways movement over here, this bullish pennant may have already ended. So if you look at the current price push up, okay, there is a bullish breakout from here. Right, there's a bullish breakout. So right exactly after it came close to the short-term pivotal support that we highlighted yesterday at 1.1240. So no change with this positive bullish breakout of its ongoing of its minor bullish pennant formation. Right now in today's Asia session, we'll still maintain the intraday bullish bias on euro dollar using 1.124 as my short-term pivotal resistance level. First resistance, short-term pivotal support level, pardon me, 1.1240 short-term pivotal support. Intermediate resistance level to watch will be at 113.80, followed by 114.80, 115.20 next. Only a sudden push down and the hourly close below 120.40 will invalidate today's intraday bullish bias to kickstart another round of minor corrective decline sequence, exposing the next near-term support at 111.50 followed by 110.70. So i.e. in a nutshell, still maintain that intraday bullish bias after this bullish breakout is being seen right now at above the upper boundary of this bullish pennant formation using 1.1240 as my short-term pivotal support level. The stronger pair will be the sterling dollar that managed to surpass our first resistance that we highlighted yesterday at the 132.10 figure level. So this 132.10 figure level will be now 132.10 level will be down by first level of support to watch as we head into the European session. So still no signs of a bullish exhaustion yet that's being seen on the sterling dollar. So with that, I'll use a slightly higher pivotal support for today at this 131.20 as my short-term adjusted pivotal support on the sterling dollar, still maintaining that intraday bullish bias on the sterling dollar, with the next intermediate resistance coming in for today 133.10 followed by 133.70, 133.90 next. However, if only a sudden price action plunge and break below 131.20, that would invalidate today's intraday bullish bias to kickstart a minor mean reversion decline or a minor corrective decline sequence, exposing 130.30/129.80 and potentially if 129.80 can't hold, it may slip down further to 1.2925. So this 130.30/1.2980 is rather important because it corresponds to the 20-day moving average. So in a nutshell, still maintaining that intraday bullish bias on the sterling dollar with a slightly higher adjusted short-term pivotal support for today at 130, 120. Up next will be the Aussie dollar. Still recall Aussie dollar yesterday we do mention we do have a bullish bias, but as you approach the medium term pivotal resistance level of 63.90/64 figure, we mentioned we got to be very cautious to look out for any signs of a bullish exhaustion, because this is a pivotal support where the previous rally in three occasions previously where the Aussie dollar boost got rejected and it shaped a rather negative price reaction thereafter. So what you could see is that we start to see signs of a potential bullish exhaustion already as we are speaking. What you could see is that price action on the Aussie dollar shape a higher high over here. All right, higher high, but in correspondent, the RSI starts to shape a lower high. All right, almost hitting the overbought level, shape a lower high, and right now it broke below a parallel ascending trend line support level and inched down below the 50 level mark. So indicating that bearish momentum has starts to creep back into the Aussie dollar after a close retest at 63.90/64 figure level yesterday, which is the medium term pivotal resistance zone. So yesterday, during the US session, it print an intraday high of 63.83, give or take almost the same. So using 63.90/64 figure level as my pivotal resistance for today, we'll flip to a intraday bearish bias right now on the Aussie dollar. First support zone to watch out for on the intraday basis for today, 62.80, 62.50, which correspond to the 50-day and the 20-day moving average, I think as a similar support zone as well. Only a breakdown below 62.50 may open up scope for a more pronounced intraday decline on the Aussie dollar to expose the next intermediate support level at 61.90/61.70. So only an hourly close above and a breakout above 63.90/64 figure level, then today's intraday bearish bias will be invalidated to see a further squeeze up towards 64.70, which correspond to the 200-day moving average as well. So i.e. in a nutshell, given the latest bearish observation that has been fleshed out on the hourly RSI right below the medium-term pivotal resistance of the Aussie dollar, we will flip to an intraday bearish bias for today using 63.90/64 figure as my pivotal resistance level on the Aussie dollar. Lastly, dollar yen. So the dollar yen continues to trade sideways as it continues to congest within this bearish pennant formation, holding below the 144.30 short-term pivotal resistance level. So right now it's attempting to break below the lower limit of this bearish pennant formation. So still no change. I don't want to tighten my short-term pivotal resistance to be so tight. So the upper limit of that pennant resistance today will be at this 143.80 level, but I don't put it so tight at 143.80. Still using 144.30 as my short-term pivotal resistance level. Still maintaining that intraday bearish bias as potential risk of behavior that may take hold in today's major stock indices that may benefit the yen. That means, i.e., triggering a bearish bias move on the dollar yen. All right. So next near-term support level to watch, no change, will be at 14170/55. A breakdown below it exposes the important medium-term swing low area of last September over here. Okay, previously last September, 7th of September, at also confluence with a 1.236 Fibo extension on the downside at 140.30/140 figure level on the dollar yen. Only a sudden bullish reversal and an hourly close above 144.30 short-term pivotal resistance will invalidate today's intraday bearish bias to see a squeeze up towards the next intermediate resistance zone of 145.80/14660 next. So that's for the dollar yen, still maintaining the intraday bearish bias as it's about to shape that potential bearish breakdown from its bearish 3 days of bearish pennant formation using 144.30 as the short-term pivotal resistance on the dollar yen. All right, so that sum up the intraday technical outlook on the major dollar pair. So now let us turn our focus to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 right now managed to stage a bearish breakdown below the 21,040 Titan short-term pivotal resistance level that we highlighted yesterday. All right, short-term pivotal support that we highlighted yesterday. So it's really staged this bearish breakdown over here as we are speaking. Okay, so this one here will be a first resistance level to watch. later in the second half of today's Asia session, 21,040. So since it's now breaking down below 21,040 as we are speaking, I will use today's gap down here as my short-term pivotal resistance level for better risk management perspective. So this level here, let me highlight in darker one, 21,450. 21,450. Yeah, so this will be my short-term pivot for today. Okay, this will be the next resistance based on the latest price action that we are seeing right now. Okay, over here. All right, so because as price action is breaking down below this 21,040, that was yesterday's short-term pivotal support, now turns into a pullback resistance in the first instance, and using today's gap down resistance at 21,450 as my short-term pivotal resistance level. So we got to respect the current price action, current bearish price action, and flip to a intraday bearish bias on the Hong Kong 33 representing the Hang Seng Index, despite the fact that the China key data that I mentioned earlier on at the first session of today's daily dose came in much rosier and better than expected, indicating that the Chinese economy right now is now in better shape, or I would say that there's higher probability that it may not it will start to negate the 2 years plus of deflationary risk spiral that was previously inflicted on the Chinese economy. But price action on the Hong Kong 33 is not reflecting that. It's more reflecting on the current risk-off environment seen in other major stock indices due to the trade tariffs escalating wars between US and China, and right now with EU as well. So next near-term support level to watch on the Hong Kong 33 will be at 20,280, followed by 19,900 level as price action retrace this previous recovery. All right, that was from the low of 9th of April. So that is the 61.8% FIBO ratio, the 61.8% golden ratio that correspond to the 19,900 graphical support and the 200-day moving average. So this is the key support level to watch. So once it hit this 19,900, if we start to show signs of a bullish price action again based on Japanese candlestick on the hourly time frame, that could constitute the start of another bullish recovery, all right, on the Hong Kong 33 or the Hang Seng Index. All right, so something to watch out for. But on the intraday basis, we'll flip to a intraday bearish bias. Only a push up and the hourly close above 21,450 will invalidate today's intraday bearish bias to see another round of recovery. Retesting 22,740 intermediate resistance. Only a breakout above 22,740 will see a more meaningful up move towards the next resistance zone of 22,220/22,500, which is correspond closely to the downward sloping 20-day moving average. Next up will be the Japan 225. So the Japan 225 continues to inch downwards below our short-term pivotal resistance zone that we highlighted yesterday, 35,190/730. So with that, we'll still maintain this pivotal resistance zone and maintain our bearish bias for today on the Japan 225, representing the Nikkei 225. Also, latest bearish observation that has been flashed out on the Nikkei 225, or the Japan 225 on the hourly chart will be its hourly RSI momentum indicator. Yesterday, it flashed a bearish divergence, and today in today's Asia session, it staged a bearish breakdown below its parallel ascending trend line and below the 50 level mark, which indicate the return of intraday bearish momentum on the Japan 225. Next near-term support level to watch. The first support will be very important, will be 33,440. Former minor swing high area of 11th of April, and also coincide with the lower limit of this minor bullish channel that I drew from the low of 7th of April as well. Okay, a breakdown below 33,440 will increase the odds of the start of another impulsive down move. That means a breakdown below 33,440 also imply that the rally that was being seen from 7th of April all the way up to 10th of April is like a bearish flag formation within its short and medium term downtrend phase of the Japan 225 that is still possibly intact. So a breakdown below 33,440 increase this bearish narrative to expose to increase the odds of such bearish narrative, pardon me, to expose the next near-term support level at 32,425. Only a sudden bullish reversal and the hourly close above 35,190/35,730 that will invalidate today's intraday bearish bias to see a squeeze up towards the next resistance level at 36,450 and even 37,380 next. So i.e. in a nutshell, latest bearish element on the hourly RSI continues to support our potential bearish bias for today on the Japan 225 using 35,190/35,730 as a short-term pivotal resistance level. Next up will be the Germany 30 representing the German DAX. So they'll recall the German DAX, we were neutral yesterday. So right now it hit the upper limit of that neutrality range, which is 21,610, and also retested the minor descending trend line that I drew from the high of 26th of March. And price action upon the retest shaped a higher high yesterday. And right now the RSI shaped a lower high instead. All right, over here. So with this latest bearish observation on the hourly RSI indicating that potentially the upside momentum that is seen yesterday during the European session has been exhausted and price action may stage a minor bearish reversal for today, at least. All right, so using the upper neutrality zone yesterday level 21,610 now will be turned into a short-term pivotal resistance level. First near-term support level to watch will be 20,890. 20,890 also correspond this minor congestion area here of 11th of April and 14th of April, where price action managed to held up since then. So a breakdown below 20,890 will increase the odds that the rally that was being seen from 7th of April all the way up to 10th of April is more like a minor counter trend rebound phase within a medium-term downtrend phase that is still intact on the Germany 30. So hourly close and a breakdown below 20,890 will increase such bearish narrative to expose the next near-term support level at 20,210/19,970, which correspond to the 200-day moving average. Only a bullish reversal and the hourly close above 21,610 will invalidate today's intraday bearish bias to see a squeeze up towards the next intermediate resistance at 22,240, which correspond to the 50-day moving average, acting as a similar resistance level as well. So net in the nutshell, flipping to an intraday bearish bias for today on the German 30, given the bearish observation that I highlighted for you guys at the hourly RSI using 21,610 as my short-term pivotal resistance level. Lastly will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average continues to remain lackluster below the 20-day moving average, also below the short-term pivotal resistance that we highlighted since Monday, 41,180. Bearish observation on the RSI as it shaped a lower high over here, and we start to see a bearish breakdown below a parallel trendline support level, okay, indicating the start of a potential short-term intraday bearish momentum that may creep back into the US Wall Street 30. So still no change, still maintaining the intraday bearish bias on the US Wall Street 30 because it haven't broken down below our first support that we highlighted yesterday, which is 39,950. I do not want to tighten my short-term pivotal resistance to be so tight, so still remains at 41,180. A breakdown below 39,950 will increase the bearish narrative for today, exposing the near-term support level at 39,090 next. Only a bullish reversal and an hourly close above 41,180 will invalidate today's intraday bearish bias to see a squeeze up towards the next to the medium-term resistance zone at 42,400/42,855, which is the key intersection point of the 50-day and the 200-day moving average over here at 42,400. So i.e. in a nutshell, still maintaining the intraday bearish bias on the US Wall Street 30 using 41,180 as my short-term pivotal resistance level. Next up will be the Nasdaq 100. So the Nasdaq 100 continues to plummet over here. Also remains lackluster below the 20-day moving average. Right now, it gapped down into this Asia session and testing the first support level at 18,580. So with that, I do not want to tighten my short-term pivotal resistance to be so tight, to be at the 20-day moving average right now. So the 20-day moving average, okay, so this is 20-day moving average. at 19,050. So still using 19,280 as my short-term pivotal resistance level on the Nasdaq 100, maintaining the intraday bearish bias. So after a clear breakdown with hourly close below 18,580, then we will see an explosion or an increase of that bearish narrative to expose the next near-term support level. Thereafter at 18,130, followed by 17,410 next over here. So it seems to us that the rebound that was being seen on 7th of April all the way up to 14th of April, early this Monday, is more like a counter trend, minor dead cat corrective rebound within a medium-term downtrend phase that is still intact on the Nasdaq 100 and in fact intact in all the major US stock indices. All right, only an hourly close and a break up above 19,280 short-term pivotal resistance on the Nasdaq 100 will invalidate its bearish bias view for today and see a squeeze up towards its key medium-term resistance at 20,350, which correspond to the 50-day and the 200-day moving average. Right now, the 50-day and the 200-day moving average has already shaped a bearish crossover. All right, so the 50-day is now crossing below the 200-day moving average, added on another negative technical element for the Nasdaq 100 to support today's bearish bias view. All right, so with that, let's sum up the intraday technical outlook on the major stock indices. Let us now focus our attention to the major commodities market, starting with that skyrocketing yellow metal, which is gold XAU/USD. So for gold XAU/USD, price action continues to rally and hit our resistance level at 3280/3290. Given that it hasn't break above 3280/3290, I do not want to have a very tight short-term pivotal support level at 3230, which was the bullish breakout that's being seen in today's Asia session. Now turns into a pullback support level and also the lower limit of this accelerating minor ascending channel from the low of 9th of April. So I will use a slightly tightened short-term pivotal support level, but not too tight at 3230. It will be at 3211/3196, which is the minor swing low that got supported since 11th of April. So as long as this short-term pivotal support zone holds 3211, 3196, we'll still maintain that intraday bullish bias on gold XAU/USD is potentially try to scale up new fresh all-time high. So next interesting level of resistance level to watch being defined by a cluster of Fibo extension level 3235/3335, followed by the upper limit of this minor accelerating channel at the minor accelerating bullish channel at 3372. And if we do a Fibo extension of this ongoing impulsive up move, that correspond to the 0.618 Fibo extension level at 3372 as well, which correspond to the upper limit of this minor bullish accelerating channel. Only a sudden bearish reversal on the downside and the hourly close below 3211/3196 that will invalidate today's intraday bullish bias to kickstart another round of minor corrective decline sequence within its medium-term uptrend phase to expose 3168 followed by 3135. If 3135 can't hold, it may slide down further to 3094, which is the all important upward sloping 20-day moving average as well, acting as a similar support at 3094. All right, so net in a nutshell, overall technical elements still remain positive for gold XAU/USD. Yes, there will be some form of a pullback taking shape during the European session because the hourly RSI now is at the overbought level, but no signs of a bearish divergence. So pullback support level to watch should be around at the first support for today at 3231, but using the a slightly higher pivotal support zone at 3211/3196 to maintain our bullish bias for gold XAU/USD for today. All right, lastly will be the West Texas crude oil. So like I mentioned earlier, the West Texas crude oil start to show signs of bearish, we call it observation coming back into the daily time frame chart. So with that, on the hourly time frame chart, yesterday we still maintained that bullish bias using the first resistance level at 63.36, but unfortunately, price action can't clear above 63.36. And if you look at the hourly RSI, has continues to print a series of lower high over here, and right now during the Asia session, it's now attempting to break down below a parallel ascending trendline support level as well. Okay, looking to break down below this parallel ascending trendline support over here. Okay, hasn't break yet, but about to break testing. But prior to this test, the price action of the hourly RSI start to shape a lower high, so indicating lack of upside momentum. So there's a big risk that it may break down, it may shape a bearish momentum breakdown. So with this bearish observation that's being seen on the hourly RSI, we'll flip to an intraday bearish bias for today using 63.36 as my short-term pivotal resistance level for West Texas Oil. First support level to watch 58.30. A breakdown below 58.30 may see lower low at 54.50/53.80 next. Only a bullish reversal and a push up above 63.36 will invalidate today's intraday bearish bias and revive the extension of the minor mean reversion rebound sequence again, exposing the next near-term resistance level in first step at 64.40, which correspond to the downward sloping 20-day moving average. A breakout above 65.40, pardon me, a breakout above 65.40 may see the extension of this mean reversion rebound, retesting 68.05. Next intermediate resistance will also correspond to the downward sloping moving average. So net in a nutshell, due to the bearish observation that I highlighted on the hourly RSI, indicating a potential bearish momentum breakdown, we will flip to an intraday bearish bias for today on West Texas Oil using 63.36 as my short-term pivotal resistance level. So that also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today calendar will be rather heavy, starting from the European story or European side. At 2 p.m. we will start to see a UK inflation rate and UK retail price index, so that could impact the sterling dollar and the sterling crosses. And afterwards, during the European session, pretty much quiet over here because the inflation rate of Eurozone, that is the finalized one, so that shouldn't be much of a game changer because 2 weeks ago they already came out the preliminary rate itself, preliminary inflation rate. And during the US session, very important will be retail sales, because retail sales constitute the services activity in the US, which contribute to 3/4 of US GDP growth. So retail sales figure will be out at 8:30 p.m. Singapore time, something to take note of, and followed by 9:45 p.m. Singapore time, we have Bank of Canada interest rate decision. And thereafter, at 10:30 p.m. Singapore time, Bank of Canada governor will speak in a public press conference. So that could impact the dollar CAD and the CAD cross rates as well. So for those who are monitoring the West Texas crude oil, we have the weekly EIA crude oil stockpile change for the week ending of 11th of April. So that will be out at 10:30 p.m. Singapore time, and that may impact the price of the West Texas crude oil itself. All right. So then thereafter, a rather quiet session, and at 12 a.m. Singapore time, we have Fed Hammock speaking, and most importantly, at 1:30 a.m. Singapore time, we have the big boss Fed Chair Powell's speech. So market participants will be hearing very close to his speech to see any signs that the Fed is still more concerned about sticky inflation rather than growth risk, due to the fact that of that uncertainty surrounding the implementation of the very complex trade tariff rates or structure that is being ignited by the US White House administration right now. And during tomorrow's early Asia session, for those who are monitoring the Kiwi dollar, at 6:45 a.m. we have the Kiwi Q1 New Zealand Q1 inflation rate. All right, so that sum up today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.